Good morning. Can you hear me?
Okay, so it looks like we are on. Sebastian, yes, we can hear you and we can see you on the screen behind us. Hope you can do the same. Sound seems to work, video is working. So after Dominique's short presentation, can you take us through a little bit of what Citibank is doing? Of course, not globally, we all know that, but in terms of what it's doing in terms of helping Central European companies with their US expansion. Is that a big market for you? What are you doing differently in that space than some of the other companies?
Yes, good morning. Thank you very much. And my name is Sebastian Perczak. I'm heading the commercial banking department at Citi Handlowy since 2018. However, I have been with Citi since 1998, when I started with the Citi syndicated loans department in New York. And then, Dominic, I sympathize with your story because I also decided to move to Poland, finding our market to be very interesting, dynamic, and challenging. So I have been in Poland since 2005, and I must say that it has been an enjoyable journey with Citi in Poland. Well, as you know, Citi has been in Poland since late 1990s. In 2000, we have merged with one of the largest commercial banks in Poland, Bank Handlowy. As a matter of fact, we have been celebrating 150th anniversary in 2020. And look, Citi is a true global bank, a true global organization which is committed to assisting our clients in their global expansion. And what we have been doing the best over the past over 100 years in over 100 countries is supporting the foreign subsidiaries of our global clients. We have a department which we call Global Subsidiaries Group, which is responsible for working with the clients headquartered in the United States or in Western Europe. And this has been one of the most important businesses of Citi in Poland in late 90s, early 2000s. However, as Polish corporates have grown, we have realized that we can actually do the same, and we should be committed to helping our Polish corporates expand internationally. And this is what Corporate and Commercial Bank does in Poland. Now, when we look at the Polish market, approximately 2/3 of the Polish corporates admit that they do business internationally. And of course, Central and Eastern Europe is the most common destination of our operations. However, Western Europe follows with approximately 26% of these corporates doing business in Western European countries, 9% of them doing business in Asia, and approximately 6% of the Polish corporates doing business in the US. And while we do have a number of Polish corporates with rep offices or sales representatives in the US, we do see an increasing number of Polish corporates actually setting a physical, well-embedded footprint in the United States, setting up production facilities, setting up distribution facilities, but also, which is, I think, very encouraging, when we look at the Polish startups, approximately 41% of them admit that they are already doing business in the United States. And this is where we do not only export our production capacities, but we export our know-how, our intel. Citi has a very well-developed model of supporting clients expanding internationally. We look at our relationships holistically from the global perspective. We do not run our banking relationships locally with local subsidiaries without cultivating, without executing a global type of relationship. What do I mean by that? If we have a Polish corporate which is looking to expand internationally, the first thing that we do is we are trying to make sure that we do assist these clients with setting up in the foreign country. And I think that USA should be our primary market given our headquarters and our major shareholder. So starting with the account opening, starting with tools that enable our clients to manage their liquidity, their treasury operations centrally, providing them with one common online banking platform, Citi Direct. These are the things that, while many banks can deliver on the regional scale, we at Citi can deliver globally. Then when we look at the credit exposure, when we look at the credit cooperation, we do assess the risk based on a group level consolidated financials. And while it is difficult for the subsidiary to establish a new banking relationship with a new bank, it is much easier, in our opinion, to leverage the relationship built at the home country at the subsidiary level. Therefore, if a Polish corporate expands in the United States, they are treated as a well-established relationship at the subsidiary level if we have a relationship in Poland. We do follow what we call an elsewhere approved credit process, where credit facilities are actually approved at the headquarter level, and then we allocate the lines for the working capital purposes to selected countries. Therefore, the credit process at the subsidiary level is easier, quicker, more user-friendly, if you will. It doesn't have to be collateralized on hard collateral in the United States. We do take parent guarantee, or we do execute a bank guarantee for that purpose, and we do cover our risk here locally. So this is related to, setting up your operation in the US, setting up your working capital lines of credit, your Visa business card needs, your PSE lines for FX transactions. However, we can support a major CapEx projects for the Polish corporates setting up production facilities in the United States as well. Not only in the US, but in the countries where Citi is present. Polish corporates, in my opinion, have a great advantage and can leverage a very competitive and a very liquid local bank market. The Polish market, in my opinion, remains to be one of the most liquid, most aggressive, and most competitive banking markets in Europe, or even at the global scale. There is a lot of liquidity. We have seen a market shifting to COVID-related liquidity type of facilities in 2020, with CapEx facilities, with the number of CapEx facilities decreasing. Now, this is changing, and in 2021, we have seen a pickup in CapEx type of long-term facilities arrangements, where clients were either looking to refinance the COVID-related liquidity facilities or have decided to move ahead and to go ahead with their CapEx plans that have been postponed. And here, the corporates have a number of options that they can choose from, starting with bilateral bank facilities, where a bank can accommodate a single facility without syndicating this facility into the market. And I think that this is a facility where you can leverage your relationship to the highest extent, where you can secure flexible terms and most competitive commercial terms of this facility. If the facility exceeds the capacity of your relationship bank, most of the corporates tend to arrange what we call club deal facilities, where a transaction is arranged by a group of 4, 5, 6, 7 banks. And where here you have to pay a premium for arranging this facility in the market. You pay the premium for the size, if you will. You are still able to leverage the relationship with the banks that you cooperate with. I think most of the corporates cooperate with a few banks, and these are typically the banks that you call to arrange such facility. We at Citi are happy to arrange these facilities on the best effort basis, but we can also look at the projects where underwriting is necessary, where funds need to be certain. And these are typically M&A type of facilities where you as a bidding party must provide certainty and commitment of funds. Larger facilities, of course, require a larger group of banks, and here, this is the situation that requires a very strong syndicate desk, a syndicate which in some cases may expand beyond the Polish market into the European market. Now, if you go into the United States, you may want to tap into the US market, which is also quite competitive, and the US bank market is typically used for backstop type of facilities, bridges, which are then refinanced in the debt capital markets. And then we move into the capital markets. And Polish corporates can also take advantage of the local bond market, which can accommodate transactions exceeding 500 million Polish zlotys. We have seen transactions, going to up to 1.5 billion Polish zlotys in the Polish zloty. However, if you are looking for a transaction which exceeds, I would say, 200 million euros, 250 million euros, you may want to consider a European bond market, what we call a high-yield bond market, which is, of course, the most expensive, but then, on the other hand, most flexible in terms of covenants, in terms of financing terms, in terms of loan amortization. You can typically get into what we call a bullet structure, where you actually do not amortize your capital, but you pay it at the maturity. So I think that there are numerous options. My recommendation would be to really leverage your relationship banking partners. But as you expand outside of Poland, I think your local banking partner that you cooperate with at the headquarter level should be your bank to call to work with you as you expand internationally. And while financing is very important, I think the local know-how, the local intel is just as important to the success of your journey. Thank you.
Okay, great. Sebastian, I've got a question. We mentioned earlier, we talked with Case Sergio about, I brought up the idea that Germany is such a powerhouse and on the radar screen of so many US cities and states. From your perspective, knowing the Polish customers and clients, do you see there is much stronger interest in the US market? I mean, should the US cities and states be more focused on Poland than they currently are? Is it a big enough deal for them to bother with? One of your clients in the audience is Canpack, which is, of course, substantial business in the US, real business, I would say, real scale. But I'm curious if you see other US or other Polish companies that are worth US cities and states chasing after.
First of all, let me send my regards to Canpack.
She's waving at you right now. Yes.
I'm very happy to have this opportunity to be in the same event. Many great stories to share, I believe. But look, the US market, I mean, it's one of the largest markets, which I think that you basically cannot afford to ignore. And while it's good to make the first step of marking your presence there with distribution of your products, with setting up your rep office, what we have seen is that in the US, you can certainly take advantage of the fact that you are physically present there. I mean, US market is one of the most competitive markets, if not the most competitive markets in the world. But also, and probably I'm sure that it has already been discussed, or if not, it will be. It is the market which provides startups, corporates with a lot of incentives, a lot of tax breaks, a lot of assistance programs to attract the investment into those markets. When I look at my clients that have expanded into the United States with production facilities, this was, I would say, driven by the fact that they had to be competitive, be able to provide just-in-time delivery, be able to also take advantage of very close trade relationships with the local off-takers, but also to be able to take advantage of this competitive environment provided by the local jurisdiction, local governments, which is very common in the United States.
Okay, great. I'm going to jump over to Dominique. And by the way, if you guys have questions in the audience, please raise your hand. You didn't mention the size of your fund, maybe on purpose, but I wanted to know what's the size of this? Is your first fund, right? So give us some details of that. But also, what will be your further expectations of additional funds that you might raise? And can you kind of tease us with some of your limited partners in the U.S.?
Sure. So our first fund is it's a starter fund, so it's around $25 million dollars. Yeah, so it's not buku bucks, but what we've seen in this market, and I believe what the strategy may be for the next fund, will be there's a massive gap in Series B and Series C financing. So these rounds that are for Europe, yes. You have a lot of seed funds, you have a lot of Series A funds, but then B and C, a lot of these companies are forced to go to the UK or go to the US and raise from investors there. And these investors, $5, $10, $20 million checks. So there's a massive gap and I think a massive opportunity in that market. One of our LPs, really our only LP in this fund, is actually the Polish Development Fund. Yes, yeah, so it's PFR. But we have been speaking to a lot of potential LPs that are based in the US. Americans are beginning to get more and more interested in the region. Whether it's in a limited partner capacity or in a GP capacity. Khosla Ventures recently invested in a company out here called No Magic. It's a robotics company. So more and more VCs from the Valley are coming into the region and making investments. So, and it's not one of those things where you can just show up and start making investments. You have to make relationships with companies and founders, and that takes a lot of time. So in that capacity, it's from an American point of view, it may even be easier to get exposure to this market by being an LP as opposed to being a GP.
And for the next, let's say, generation of your funds in general, is this fund kind of last you another year or two, and then you go to the next round? You may not be ready to talk about that yet, but I'm curious what the longer term aspiration is.
Yeah, no, it's a great question. We've got about, I would say, another 12 to 18 months of deployment left in this fund. We see, a ton of deals. A lot of deals are very exciting. Here in Poland, but also we see a lot of companies that maybe are based in the UK. We have 2 investments in the UK, but they have substantial research and development centers here in Poland. So I think that the Polish market is still sort of growing in its maturity of entrepreneurship. There are more and more larger tech companies that are now coming from, let's say, California, opening up R&D centers here in Warsaw, like Google Cloud is a perfect example. And Polish people are very entrepreneurial. So you'll have an engineer work at Google Cloud for 2 or 3 years, make mistakes, and think to himself, gee, I can do a better job at this. And then he or she will go out, start their own companies after getting great experience in, at Google. And I think that this next wave of companies is probably going to start cropping up in the next 3 to 4 years, because Microsoft is here, Google is here, NVIDIA just opened up an office at the new Varso Tower. So I think this...
Who is that? Who is that?
NVIDIA?
Yeah, yeah.
Yeah, so they have a deep learning R&D center that they're opening up. So, over the next 5, 6 years, I think there's going to be a lot of wealth creation, a lot of enterprise creation here in the region.
Yeah, I mean, one of the things that we've seen over the last 5 to 7 years is the growth of the outsourcing business, BPO, shared services, the offshore of global business services. But with that comes the IT technology side. And so much of the work done you see in places like Krakow and Katowice, Wrocław, are the IT operations of West Coast, East Coast, UK companies. That also leads to other companies spinning out of that have been with that same company for years, and they say, we'll do the next thing. But I think growing up inside a big company, first of all, it's kind of a safe way to do it. They learn, they see the opportunities, and they then launch their own products, right? Just totally different thing, Belarusia. I mean, Belarusian is, we all know the troubles there. A lot of those guys have moved to Poland. Radar screen at all for you guys?
Oh, absolutely. We actually looked at a company, and unfortunately we didn't get into the round. But there was a Belarus company called One Soil. Really interesting company. They were taking satellite imagery data of agricultural fields, using deep learning to then image those fields to then figure out whether or not the soil has too much or too little fertilizer. They then sell that data to McKinsey and Cargill so that those individuals know whether or not they need to sell more or sell less fertilizer for a particular region. Very talented team. When I spoke to the team, they were still in Minsk, but they were in the process of actually making an exodus and moving to Warsaw.
To Warsaw, okay.
So, I mean, that's just one example. But also, Ukraine is another perfect example of how geopolitical tensions are forcing a lot of really talented people to move to Poland. A very good friend of mine runs a consultancy, software consultancy, and 1/3 of his engineers are Ukrainians. And the talent is right about the same, and slightly less expensive than, say, a Polish engineer. And so capitalizing on that arbitrage is just a phenomenal opportunity.
With the fact that the last year people are not physically required to be where they were a year ago, you mentioned arbitrage of salaries. How much of the difference in, let's say you're a typical software developer in San Francisco versus in Warsaw, Krakow, how much does that difference still exist today? It must be substantial, but I'm curious where the arbitrage, how that's working.
Yeah, I mean, you have sort of 3 different tiers of engineers. So you have like the back-end, front-end, web developers. In Poland, 5-year senior dev will run you around $35K USD per year, whereas that same exact developer in California probably run you about 150 to 200K per year.
Huge difference.
Yeah. Not to mention, for that 200K, your quality of life in California is actually a lot lower than on a 35, 40K salary here in Warsaw. But then, then you go to more deep learning, machine learning, AI, like the really advanced talent, and that'll run you about 100K USD per annum here. But in the Valley will be about $500,000.
Wow.
So the arbitrage is still pretty massive.
Right, interesting. And deal flow, you mentioned deals, how you GPs finding deals here. How do you find deals? Is there any particular special sauce that gets it done, or is it just meeting people? Is there some process to it?
Yeah, so something that's really unique to this region is the fact that you have, for the longest time, for the last 10 to 15 years, you've had these software development consultancies that are, basically mom and pop shops. And they've acquired customers for 10, 15 years, and there was no access to capital here in the region, so they were forced to be in this services model. Now, the cybersecurity company we just invested in, that was a spin out from one of these software consultancy businesses where they had a bunch of clients. They found a common theme across those clients. They developed a product. They then tried selling that product to other enterprises, and they found a really nice product market fit, spun the company out. Software consultancy owns about 20% of the company, and they found this interesting niche. So we actually do like to talk to a lot of these consultancy shops that have been around for 10 or 15 years because they understand the market really well, and they also know how to build products. They're just looking for capital because they otherwise don't have that access to capital.
As a potential source of deals, and a little bit different, but you mentioned earlier BPO, guys investing possibly in BPOs. Do you see in the shared services or BPO businesses here some sort of struggling companies that might also spin off something that would be ripe for investment? I mean, I work with lots of shared service centers, and most of them are very, very strong. They're doing very well, growing very fast. But are there some laggards there? Are there some opportunities to go into them and say, look, we'll take out that piece, outsource it to you? But do you see any opportunities in that space?
We do, and actually, one of the so I briefly mentioned kind of a cooperation between us and this private equity firm. So a lot of these BPOs, where they struggle is being able to get in front of customers, developing a good sales pipeline. So it's not a matter of the fact that they're struggling because they can't hire or they're just not they don't have the technical aptitude, but rather it's they don't have access to other markets. So you get a private equity firm like Aquiline come in and say, listen, we'll acquire your business. You can manage the business as if nothing ever happened. We'll leverage you up. You need a budget to hire 20 more people, we'll give it to you. We'll give you access to all of our portfolio companies so that we can cross-pollinate services across our businesses. And we can generate some real wealth for you as a company. So really having access or not having access to larger markets, I would say is what is the reason why some of these companies struggle. But if you have somebody like an Aquiline who partners with you and can give you access to those customers, you can really build substantial businesses.
Okay. Any questions from the audience? We're going to finish in a few minutes. Or any questions online, by the way, from your side? Okay. We were talking earlier. You've been here for 3 years or so, right? 3-4 years. Great quote. It's like a printable quote. You were saying we were talking about energy in Warsaw and how I like it because it's energetic. It's used to be very funky, very unusual. It's more streamlined now, but still lots of energy. And Dominique said.
Yeah, Warsaw right now, because I moved to San Francisco in 2010, and I feel the same energy here that I felt in San Francisco in 2010 before all of the madness started, and even with like the buildings that are cropping up left and right, all of the new constructions, the entrepreneurial spirit. There's just something in the air. You can't quite put your finger on it, but it's there.
Yeah, I think so too. Yeah. We will leave on that very optimistic note. So the morning is formally over. So those of you who are here physically, Sebastian, you won't be able to join us for lunch, but I don't know are you going to join us for dinner tonight?
I will do my best, yes.
Good. I take that as a yes. Okay. So we are having lunch upstairs, so we know that. We're back here, I think it's exactly 1 hour. So 1 p.m. here. Those of you online, take a break, do your one-to-one networking. Back at 1 p.m. CET time. And we have a very busy, very interesting afternoon. U.S. audience will begin to join from Nevada, from North Carolina, from Austin, Texas, Dallas, Texas, from Nashville, Tennessee, a few other places. So look forward to having you back online at 1 p.m. And those of you having lunch upstairs, back down at 1 o'clock. Thank you all very much. Sebastian, thank you. And Dominique, thanks very, very much.
My pleasure.
Thank you.